For decades, the US stock market has been the envy of the world. It was where fortunes were made. Investors, both domestic and foreign, flocked to Wall Street. They sought to capitalize on the dynamism and innovation of the American economy. But something has changed. The recent performance of the US stock market has been shaky, to say the least. Investors are nervous, and for good reason. The days of American exceptionalism in the financial realm seem to be fading. The US stock market, once considered a safe haven and a gold standard for returns, is now facing serious challenges. This shift in sentiment is palpable. Investors are no longer as confident in the stability and growth potential of the American economy. The reasons for this shift are complex and multifaceted. However, one factor stands out: the unpredictable and often erratic economic policies of the Trump administration. These policies have injected a level of uncertainty into the market. This uncertainty has made investors wary. They are now looking elsewhere for more stable and predictable returns. President Trump came into office promising to make America great again. He pledged to unleash the American economy through tax cuts, deregulation, and aggressive trade negotiations. While these policies initially fueled a stock market surge, the long-term effects have been far less rosy. Trump's trade wars, particularly with China, have disrupted global supply chains. This has created uncertainty for businesses. His unpredictable foreign policy moves have further unsettled investors. They are unsure about the direction of the US on the world stage. The tax cuts, while providing a short-term boost to corporate profits, have done little to address the underlying structural problems of the American economy. In fact, they have exacerbated income inequality. This has led to a decline in consumer spending power, which is a key driver of economic growth. The result of these policies has been a decline in investor confidence. This decline is reflected in the recent performance of the US stock market. The major indices have been volatile. They have struggled to make significant gains. This is in stark contrast to the performance of other major stock markets around the world, particularly in Europe. While the US stock market has been struggling, European markets have been on a tear. The Euro Stoxx 50, a benchmark index of leading European companies, has outperformed the S&P 500, a key US stock market index, by a significant margin in recent months. This shift in investor sentiment is driven by a number of factors. First, the European economy, while still facing challenges, has stabilized in recent years. The Eurozone crisis, which threatened to unravel the single currency, is largely in the rearview mirror. Second, European companies are seen as being less exposed to the risks associated with Trump's trade wars. Many European companies have diversified their supply chains away from China. This makes them less vulnerable to tariffs and other trade barriers. Third, European governments are seen as being more stable and predictable than the Trump administration. This is particularly true in countries like Germany and France, which have strong economies and stable political systems. As a result of these factors, investors are increasingly looking to Europe as a more attractive destination for their capital. This shift in capital flows is likely to continue in the near term as long as the current economic and political conditions persist. One of the most significant factors weighing on investor confidence in the US is the high level of policy uncertainty. Trump's unpredictable decision-making and his penchant for reversing course on key issues have made it difficult for businesses to plan for the future. The trade war with China is a prime example of this uncertainty. Trump has repeatedly imposed tariffs on Chinese goods. He has then backed down from these tariffs after meeting with Chinese President Xi Jinping. This back and forth has created confusion and uncertainty for businesses. They're unsure about the rules of the game. Another source of uncertainty is Trump's volatile relationship with the Federal Reserve. Trump has repeatedly criticized the Fed for raising interest rates. He has pressured the central bank to keep rates low to boost the economy. This interference with the Fed's independence